For a long time, Musk and Tesla have been making headlines on a monthly basis. The company has already done a stock split after becoming an IPO only a few years ago, and there are rumors that a second split is not far away. The attractiveness of Tesla stock has garnered a huge following from top analysts and investors. One such investor is Cathie Wood, the CEO of ARK Invest. She has been bullish on Tesla stock from the beginning, and though she's gained a significant amount of money on the stock, things didn't go well in 2021. And Cathie Wood believes her firm is being targeted, but she still believes Tesla's stock, which is currently valued at, would reach $1,500 in 2022. Why is ARK Invest being targeted, and who is attacking Cathie Wood? Let's find out in today's video. No other stock in the market garners as much attention as Tesla. Many supporters of the firm believe it's the most important innovator of the 21st century. Some critics believe that its stock's meteoric rise may eventually become the ultimate bubble. So far, Tesla bulls have prevailed. In 2020, the stock increased approximately 750%, bringing its closing price beyond $700 per share. However, bulls aren't sure that the good days are over. Analysts on Wall Street are bullish on Tesla's long-term prospects. The top analyst price target is now displayed on Yahoo. Finance is $1,083 per share, which is more than 50% more than where the stock ended in 2020, and more than 25% higher than the automaker's current price. In December, Cathie Wood's 2021 took a turn for the worst, with her ARK Invest exchange-traded funds plummeting in high-volatility trading as investors fled underperforming tech equities. ARK Invest's flagship innovation ETF fell more than 10% in December and is currently down 23.7%, placing it in the bear market territory. 6 of Wood's 8 key ETFs are currently negative for 2022. ARK Genomic Revolution was down more than 30%, while ARK FinTech Innovation was down roughly 15%. Wood, the founder and CEO of ARK Invest, rose to prominence as an investor last year. ARK's ETFs made large bets on future technologies from banking to 3D printing and profited handsomely. Investors were flush with cash due to government and central banking stimulus initiatives, so they flocked into showy technology names. In 2020, ARK's Innovation ETF was expected to return roughly 150%. However, many of those tech investments have begun to fail in recent months, as global central banks have started to prepare to turn off the stimulus taps in reaction to growing inflation. Investors are also concerned about the Omicron variant. Many IT firms, particularly those in which Wood specializes, are not likely to become adequately profitable for many years. With central banks expected to boost interest rates in the coming year, the long-term profits offered by these corporations have begun to appear less appealing in comparison to other sections of the market. Investors will confront less fiscal and monetary stimulus supporting the economy and markets in 2022, with the Fed withdrawing liquidity by tapering bond purchases, according to Steen Jacobson, Chief Investment Officer at Saxo Bank. And it implies that high-growth companies, which are predicted exclusively on low rates and big top-line growth, are obviously being substantially damaged, he added. Teladoc, Square, and Coinbase have all plummeted in value. Many of Wood's funds would be performing considerably worse if it weren't for her large bets on Tesla, which has risen more than 40% this year. Despite the fact that investors are abandoning ARK funds, Wood remains optimistic. She told CNBC last week that traditional S&P 500 mainstays are in a bubble because their prospects are less promising. "We are not living in a bubble. If we were, our plans would be soaring. I believe we have yet to begin rewarding creativity for what is about to occur, and this is where our belief stems," she stated. Things don't appear that horrible when seen from a larger perspective. Over the previous 5 years, the average annualized total return for ARK funds has been around 30%. Saxo's Jacobson believes ARK's funds have a bright future, but investors should remember their concept. The ARK fund's premise is not to outperform the S&P or the NASDAQ. It's to believe that the future is technology integrated and that in order to be part of the future, you must purchase a large number of lottery tickets. ARK Invest has been scrutinized after investors withdrew around $350 million. Cathie Wood made 2 important macroeconomic decisions that may harm the ETF after an excellent performance up to early 2021. Firstly, in May 2021, Wood expected a very dramatic downturn in commodities prices, which did not occur. She stated that she would be surprised if oil reached $70 once more. Secondly, once technology stocks declined that month, Cathie Wood stated that she loves this situation. She anticipated a 15% compounded yearly rate of return at the time. She expected a 25% to 30% return after the price reduction last year. Following the 2021 loss, ARK investors are in a state of fear. Michael Burry upped his stake against Elon Musk and added a new wager against Cathie Wood. According to regulatory filings, Burry's Scion Asset Management had pessimistically put options on over 1.1 million Tesla shares worth $731 million at the end of June, up from 800,000 shares 3 months earlier. Musk and his electric vehicle startup have been frequently accused of overpromising and underdelivering. He has also stated that Tesla's value is unsustainable and that the company's stock will crash. Tesla shares, on the other hand, have increased more than 7-fold since the beginning of 2020. Scion also disclosed that it has put options on 235,500 shares of ARK Innovation ETF as of June 30th. Wood's flagship ETF, which has more than quadrupled in value since the beginning of 2020, invests in growth firms such as Zoom, Coinbase, and Shopify, and includes Tesla as its top investment. Burry claimed in a tweet that has since been removed that Wood's promises of disruptive growth and transformational technology would not be fulfilled. Burry went on to say that ARK is defining an age. There is a pattern here that can benefit if you know your background. You're destined to repeat it if you don't. Scion made several significant modifications to its portfolio in the most recent quarter. It purchased Discovery stock and call options on Walmart, Cardinal Health, and McKesson. It did, however, sell its shares in Occidental Petroleum, Meredith, and Zymeworks. In 2021, Tesla delivered over 900,000 automobiles. It also marked a substantial increase of more than 45%. However, the COVID-19 pandemic definitely impacted both production capacity and purchasing interest in 2020. Most investors anticipated even greater gains in 2021. Many analysts believe Tesla can reach $1,500 per share, bringing its market valuation beyond $1.4 trillion. That might happen before the end of 2022. But analysts like Cathie Wood believe a few things must occur first for shareholders to get such a large payout. Let's look at some of the key things that Tesla needs to achieve. Firstly, growth is appealing to investors. The number of automobiles delivered to consumers is the most visible indicator of Tesla's performance. So far, a strong, devoted client base has ensured that there would be plenty of demand for Tesla automobiles as soon as they become available. The most significant barrier has been production capacity, which Tesla has attempted to solve by constructing additional manufacturing sites across the world to bring vehicles closer to where they're purchased. The construction of the factories in Berlin and Austin is all but completed, and Tesla looks to have the production capacity part figured out. Also, Tesla understands that its vehicles are industry must-haves. The corporation must capitalize on its bond value as soon as possible by entering worldwide markets. The challenge is how to accomplish it most effectively. India, for example, is a large potential market, and Musk has hinted at his ambitions to get things rolling there. Last week, shares of Indian automaker Tata Motors soared on rumors that the company may serve as a contract producer for Tesla automobiles on the subcontinent. Tesla will inevitably reach a larger audience, but the carmaker must move with caution. Giving up quality to rush automobiles out the door might be disastrous for the business. However, a slower rate of expansion risks enables competitors to enter attractive markets first. This doesn't necessarily constitute a long-term threat to Tesla's industry supremacy, but it may halt the stock's climb. Finally, the Bitcoin mania appears to have taught Tesla investors a lesson. Many Bitcoin investors have acquired and stuck onto their tokens through all of the price fluctuations over the last 10 years. This mindset has played a significant part in Tesla's huge share price climb to date. If those core owners continue to maintain their shares regardless of what occurs, a major increase is possible, and it's coming. Do you think Tesla can reach the $1,500 mark? Comment down below.